Hey, Cheryl.
Good morning. How are you?
Wonderful. How are you?
Good, thank you. It looks like I'm not in my screen there.
I just said if you weren't joining, I was going to be able to use your notes because you're so smart. You were very detailed.
Oh, my stuff?
Yes. I've learned a lot about condos in the last couple of weeks. I'm not going to lie.
I know Bree's always like, well, we could do it this way. And I'm like, oh, but there's so many if, ands, or buts
Right.
when you try to make it very specific.
Hmm.
It's hard to be super specific.
I get that because they're all different, which is what we're going to talk about today.
Yay.
We'll give it a couple of minutes. Sometimes it's tricky to
Oh,
get
yeah.
to update and all
Oh,
kinds
it
of.
just took me 5 minutes to like I had to reset my password like 6 times before I would finally peek it. We don't use Zoom as often as we
I
used
know.
to.
We have a lot of our relationships have started to move to Teams, but some of them are still on Zoom. So I have the same issue. Like we have to update, you know, the accounts, but this one just has like, I guess, better way. It's more universal, but I don't know. A lot of people are using Teams now.
Yeah, I've been surprised I've seen that more often now. So, I see that one's my phone. Where it drives me. I've never done a hangout before.
You
Never hung out.
haven't? The hangouts are
No.
fun. They're very fun. So each month we do a different session. So like last month, we had Mike, and the month before that, we had Allison on programs. And next month, we have Sean and Matt doing like a what's going on with the industry and the rates and the secondary market. So that one's going to be really fun too.
Yeah, that'll be good. That's a group you don't hear talking much.
Right.
So
And
that would be very interesting.
we host these for our realtor partners, so it gives them that little bit of insight too of what, you know, our smarties, our smarty Sean's and Magnificent Matt are thinking what's going on. All right, so we still have a bunch of people kind of adding, so wait, maybe one more minute. Keep popping in. All right. Well, we'll just go ahead and do some introductions and then we'll get started with, the condo curious. Like I said, I have learned a lot over the last couple of weeks helping you with certain things. And I didn't realize all the nuances that came with condos. And so I think this is a pretty valuable hangout session for our real estate partners as we're getting into the spring buying season and the summer hot market. Condos have become, pretty big. And especially in the builder world, a lot of our builders are starting to build more condos than, some of the traditional single family homes. So this is going to be a cool hangout. Before we just go into the condo world, I wanted to, get to know you a little bit. So I know you've been here at Southern Trust for a long time, but can you give us a little bit of background of who you are and where you came from?
Sure. I um I got into the mortgage business. The way I feel like a lot of people get into the mortgage business is I temped as a receptionist at a mortgage company. And if you are clever or whatnot, I guess they always grab people in the mortgage industry because it's a really interesting dynamic. And so I tempted a mortgage company that only did new construction, condominium, and PUD. HUDs, and they had a condo approval team like myself, and that all they did was work with the builders in getting Fannie Mae, Freddie Mac, and FHA approvals. And I wasn't there long before I started learning from our condo specialist and got put in the department with her. And it's just the most interesting thing, and I really enjoy doing it. Condominium, so it's stayed with me, and I've been doing it since 1993, and
So you've definitely seen all the changes from
a lot of
where,
changes.
yeah, that's wild. I know I've coined you as the condo queen, which
Oh,
you're like, I don't know where that came from. Well, it came from me. I've coined you that because I think you like bow down to the queen here. But so it sounds like you kind of like, got your queen status from learning from someone else who had a lot of experience. So I think that's pretty special.
definitely, yeah. And back then, it was a real specialty. Really, there were only two ladies in this area that did it. So, and I worked directly with one of them, and I think it's the better of the one. Um, so, and learned a lot. I mean, of course, I say that, but um, I learned a lot from that group, and doing it, and also my love of it. I mean, it's just a really enjoyable kind of fringe cool thing to know about. It's, anyway.
Awesome. Well, like I was saying, some of you may have already been on the call, but each month we do these virtual hangouts, and they're the purpose is to show our partners and all of the people we work with all the value propositions and the extras that we have here at Southern Trust that allows for our partners to continue to prospect and grow their business too. And some of these markets, like a niche market like condos, not everyone knows all the nuances to them. And how can you take something that you become very knowledgeable about and use that to grow your business? So that's what we're going to dig into today. And like I said, next month, our hangout is going to be our secondary market Smarty Pants. So Sean and Matt from our team are going to join us to talk about all the rates and what's going on in the market. So that one, don't miss next month. That's going to be at the end of May. So let's dig in. Let's get condo. Let's get condo curious.
Okay.
So you've been doing this since 1993. So like we said, a lot of things have changed. What have you seen change the most in the most recent years, like say in the last 3 to 5 years?
The biggest thing in the last 3 to 5 years, is, the pandemic came in into fruition, and I think a lot of Fannie and Freddie got a little concerned about their projects that maybe the owners rely on the short-term rental, and so they changed their condotel definition um, during that time, and it's become a lot harder to do loans in condominium projects that have short-term rentals. That's that's one of the big things. The other was the collapse of the Champlain Towers in Surfside, Florida. We are now looking at critical repairs, and we're doing a really in-depth review of projects to make sure that they don't have any critical repairs that could lead to something as horrible as those towers collapsing. I mean, almost 100 people died in that, and it had a history of homeowners suing the property management companies for mismanagement and not upkeeping the project. So we're really paying a lot of attention to that right now.
Do you see most of the condotels in like resort type of communities, or are they really anywhere?
Um, well, they could be anywhere. It's really going to be highlighted on those projects that um, we see a lot of in the Carolinas, where they're beachside, they allow short-term rentals. Um, the true condo towels have on-site registration desks. They have, maybe the management company or the HOA is involved in the rentals of the project. Uh, Fannie Mae really came out with some restrictive guidance that, if the project has the word resort in it, it's ineligible. It should be considered a condotel. If more than 50% of the units are for short-term rental in the project and you know, they're true investment units, then that's going to be dinged as a condotel for Fannie Mae. So it's made it a little harder uh, to do loans in those areas and not go to a condotel. Freddie Mac is slightly different variants of the condotels, but enough that they've kind of come out with some programs to remind us, hey, we're still here. We don't think that's a condo hotel. Come on over here. So we're doing a lot. We're looking a lot at Freddie to see if maybe that, maybe it's not eligible Fannie, but maybe we can go another direction with it.
And you say the Fannie and the Freddie, and that's kind of one of your wizardy tricks, right? Like like which one to go to or how to flip it to the other, right? From an investor standpoint, when someone presents you a condo, is that what you kind of dig into that?
Yeah, I mean, a lot of times how we try to smooth it with the loan officer and the realtor is either the realtor is taking somebody out and I'll get a list of projects from one of the loan officers that they're going to look at, and I'll look them up and see, does Fannie have it on their naughty list? Does Freddie have it on its naughty list? Is it one that maybe um, you know Fannie Fannie has it designated this because of this, but it like Freddie doesn't have the same requirements. So yeah, so we try to do it in the beginning and make sure that we're putting it in the right place from the beginning and not having to stress everybody out with last minute restructuring of loans and stuff.
Makes complete sense.
Yeah.
So like over the last 1993, I can't do the math that fast, but that's been quite a few years, right? And I mean, I remember when I bought my first house, it was like, I don't know, 2006, maybe 2005, and it was a condo. And I mean, it was the perfect little condo for me, and I loved it. It was the best first house ever. So over there in Chicks Beach, so cute. Um, there wasn't a ton of condos. I mean, even then, in 2006. So, I mean, over the last few years, a lot of condos are coming up in the market. Why do you think builders are kind of going in that direction at this point?
Yeah, I mean, I don't know that condos really ever died. Remember in the early 2000s, I worked for a company and he was like, oh, I started branching off and doing other things within the mortgage industry because of that mindset that, condos were dying or, and you're hearing this again, but back then what I heard was that young people don't want to own, they don't want any responsibilities. They just want to rent and not have that. But um, and I think I'm kind of hearing that again, but it's not really true. I mean, condominium living is almost perfect for that homeowner because you're paying a condo fee, but that you yourself don't have to mow the yard, you don't have to replace the roof, you don't have to do the HVAC. So that same living is available to you with as being a homeowner, which is
But
it's a great investment.
building your equity wealth, right? It's
Yeah,
building.
yeah, yeah. I think some of it is also that people aren't telling these young people that, it is attainable. You can do it. I mean, sometimes you take that um, first and last month's security deposit and you have a couple of pets and you pay that deposit. That could have been your down payment, maybe on an
Sure.
FHA loan or something. So so
That's
I
a
think
good that's a good segue into prospecting for the real estate agents for
yeah,
first time home buyers, like having that as your business case. First, last month pet deposit, and all of those things could equate to a potential down payment or even using some of our programs that don't even require a down payment and
yeah.
having that as your knowledge bank. That's a really smart. Okay. So moving to I love business cases. I think that they're fun. So over your years, have you had that like one condo project that you were like, wow, this is tricky. This was fun. I mean, I think all the puzzles are fun. So have you had one that you think, oh man, okay. How did you help get it approved? What's the story behind it?
Yeah, I mean, I think some of them are projects that are in areas, like Outer Banks, where some lenders um, they don't understand FHA. It's not as common there because they do have such short-term rentals and such high rentals, but there are a lot of projects that are heavily owner occupied that would qualify for FHA. But lenders who are unfamiliar with it just will tell builders or HOAs that, oh, FHA doesn't like your project, and and even submitted to FHA to get a rejection. And I've come in afterwards and been like, oh, that was a terrible submission. I mean, you didn't even submit the project. You just submitted a bunch of junk and got a rejection, which you should have gotten because it wasn't, you didn't give them anything to look at, really. So, I mean, I would always say if you get rejected, let's take a look at it again and see if, is your project really a problem, or is it just, you have to explain some things a little bit better, or just submit it better and know what you're doing. Um, I can't think of one tricky condo. I think anytime you get one that's a little tough and then get it approved, you're yay. But um, I would say the one that I'm like happy with now is that we have this project that always comes up in Outer Banks, and it's one we've never been able to do because it is the true non-warrantable. It has like a medical center in it. It's 40% commercial space. It's, they do short-term rentals in there. And yet we got a VA borrower in there and we got it VA approved, no problem. But it's something that, Fannie, Freddie, or FHA would never touch. And it was just this perfect position for our VA borrower to get in there because VA has a completely different look. So it's kind of one of those projects that every time I see it, I'm like, oh no, we can't do that. And it was the first time I was able to look, see it was that project. Like, oh, we can do it if he's a veteran. So that's
That's
always
fun.
nice to see that, and we try to keep good notes on our projects when we look them up or review them so that if it does come up again, we can, kind of make quick assessments as to what might be available. And
Okay. So why are the condo financing, why is that different? Or why are there so many different rules compared to like a single family home?
yeah, what I try to say is like when you're doing a condo, it's different than a single family because we're not only just reviewing your borrower, we're also reviewing the condo itself. I know that it gets a hot spot sometimes when you have like this fantastic slam dunk borrower and they purchased in a project that is not a slam dunk project. I know that gets to be frustrating that there should be some um leniency toward the project if you have this wonderful borrower. But there isn't. I mean, we still want to make sure when we put somebody in a single family home, it's the borrower. You're the who we're investing in. You're who we know you're going to keep up that property. You're going to keep up um, the roof, and you're going to make sure that everything is should we have to take back the mortgage, that our property is still in good shape and well taken care of. With a condo, it's not just the borrower. There's this association managing the property that we have a big investment in. And, if they don't have adequate insurance, if they're not fixing repairs, fixing their roofs on time, um, we don't want that borrower stuck having to pay some huge special assessment. There's nothing worse than, they get that low down payment, they get into their house, and then, oh, hey, the roofs, we haven't been putting money aside for the roof. So everybody's going to have to give us, $10,000 by, December to pay for the roofs to be done. So who wants to put their borrower in that
Hmm.
scenario? Nobody does. So, you really want to make sure what you're putting them in is a well-run um, condominium. I mean, special assessments happen. You can't be 100% sure the money you're putting aside is always going to meet, those requirements, but you want to do the best you can to not put somebody in a situation that you could really financially ruin their life
Right.
in that way. So,
And those special assessments, they're listed in their HOA docs, right? When the borrower is receiving those prior to
yes,
closing.
so if there's one that's, current or pending that the HOA is already voted on, it'll be in their it should be in their resale disclosure package. And then that's really up to the borrower and the seller to determine, like, will the seller pay it for them in advance? Will the, buyer pay it? How they're going to work that. Um,
But the ones that come 3 months later after a purchase, those are the whammies that you're just not aware of.
Right, correct. And so you want to do everything you can to make sure you don't put a
Mhm.
borrower in that situation.
Is there any different reserve requirements for a borrower when it comes to buying a condo, or is it just the same traditional as whatever Fannie, Freddie, FHA, their requirements are?
Well, yeah, so Fannie and Freddie and FHA all want to see the budget of the condominium project that they're taking, 10% of the income and it's going towards funding their replacement reserve account.
Mhm.
So is that replacement reserve account, is that 10% the real number? Is that going to get them through? Maybe, maybe not. They really should be doing reserve studies to make sure they have enough. Fannie, Freddie, FHA, if the budget shows that 10%, then we're okay to move on. If it shows less than that, we can use the reserve study to show that they don't need as much. But if they really need more than that, we don't really need to see the reserve study to, if they're doing the 10%, that's really the amount that Fannie and Freddie and FHA find sufficient.
Okay, that makes sense. All right, so, all the projects, they're all different. I mean, they feel like, not it doesn't like one size doesn't fit all when it comes to the condo world, but in like the recent months or over the year, have you seen something that continues to pop up that, would be great for the agents, our agents to be aware of when they're showing condos?
Um, I mean, the critical repairs is a huge issue. We actually had a project one time that um, the MLS listings and the appraiser actually didn't even comment about it, but you could see from the back, the balconies, that they had all collapsed and had holes in it, and there was like the metal was coming down, and um, we got the HOA package and the board meeting minutes, noted that they were, doing a special assessment for the balconies. And I'm like, what's wrong with the balconies? And is that a problem? And then, once you see the photos, like, oh, that's a problem.
Mm.
So, yeah, I mean, if you see major critical weight, another project that had a big tarp on the roof, that's another sign that
Right.
uh, you should be looking out for. Um, I
Was that
can't,
condo in Hampton Roads or in one of our other markets?
it's somewhere in there. Yeah, yeah,
Yeah.
somewhere in the Virginia Beach area. Yeah, it
Okay.
was a small project, and there was a lot. There was a lot to that one, but um, anyway. But those are things that you should. That it should cause a little pause when you have that. I
Mhm.
mean, they looked at that balcony and they were at the lowest level, but it was the one above them. You could see the metal had collapsed and there was concrete all on the floor of our subject balcony. Um, so it doesn't have to be ours. It just has to be in the project. You really want to make sure. So it was all the upper ones that were
That
collapsing.
makes sense because that's part of the exterior and it all belongs to the actual everyone, right? Like
Yeah, yeah.
that's
I mean,
if
that's
you look at it that
100%
way.
structural, right?
Okay, so this is where I get so confused and I'm probably not 100% alone. I mean, I hope I'm not 100% alone, but warrantable and non-warrantable
Yeah.
is always very confusing to me.
I,
Can you dumb it down for little me?
Yeah, so I mean, I think traditionally the way is non-warrantable is it's really, I think, partly based on your borrower because, like I said, we've done projects in non-warrantable projects that are VA. So if you're a veteran, I don't say, oh, the project's non-warrantable because we have an outlet for him because he can go VA because VA doesn't have the same restrictions. But traditionally it's these projects that meet do not meet Fannie and Freddie normal eligibility criteria. So like commercial space, one owner owning, 40-50% of the project. Um, maybe the replacement reserves, they're not funding them properly. Maybe it's a new condo that doesn't have pre-sale met. Um,
When it's a new condo
those
and it
things.
doesn't have pre-sale met, what is like, so does the pre-sale requirements depend on how many units are going to be in the project completed?
So pre-sale is going to be by recorded phase usually. So if you have a multi-phase project, so it's going to be cumulative based on the phases as we record them. So if, phase one has 2 units, then it's got to be 50% pre-sale to primary. So we want 1 unit sold. We add phase two, now we got 4 units, 2 need to be sold. And so on. So as we keep expanding the project, as it gets bigger, that pre-sale has to keep meeting that 50% of the new number.
Okay. All right. And
And
that's
and
for,
that's and again, that's Fannie Freddie, but if you have FHA allows 30%. So
okay.
um so it's different. It's different based on the outlet as well, your agency.
Perfect. Okay. That makes sense. Okay. So there's still solutions though for the non-warrantable. I mean, we have outlets that allow for these newer communities that we can still help borrowers become homeowners in those communities in a non-warrantable sector, right?
Correct. Yeah, we have projects that commercial space, single entity concentration, reserves, some cases delinquencies. We have different outlets because non-warrantable, it's a different lender, so they get to make their own rules. And so maybe this lender is okay with commercial space up to 48%, and maybe this other
Mm.
one is 50%. Maybe we need to figure out which one you need to go to. Maybe the single entity concentration, you have that one entity that owns too many units, maybe that's too high. And then, fitting it into um, which investor we can take it to. Maybe it's a condotel. Maybe it's a condotel with timeshares, and that's another tricky one that, maybe that's got to go to a completely different venue as well. So vendor as well. So we have quite a few different non-warrantable options. So
Perfect. So, I mean,
yeah.
end of the day, there's a will, there's a way. Most likely we can help borrowers into different condominium projects with, some exceptions, of course. There's ones that you just aren't able to do, like unless it's the VA buyer that you're so excited that you were able to help. But
Yeah,
so
well, like critical repairs or um structural issues, structural litigation, or inadequate insurance. I mean, those are things that the non-warrantable groups, I have not seen them have any appetite for that, because
mm,
really that collateral is all they're making their loan on. And so that has to be insured properly and it has to be in good condition. So those are the couple areas that I haven't seen any non-warrantable group say, oh, we'll take it.
right, that makes sense. I mean, everyone has to protect the asset, right? So I
Yeah.
get it. So tell me about the Dell Wrap.
Oh, okay.
What does that accreditation mean? Like you are a Dell Wrap, you have your certification, right, to be Dell Wrap, or what does Dell Wrap mean?
So so for a condominium project to be FHA approved, traditionally it was always submitted to FHA, and um, it was approved in the HRAP method, which is HUD review approval process. HUD also came out, and this is 2011, with DELRAP, which means that they're granting the same authority to different direct endorsement lenders, who then do their own review approval process, which is what the direct endorsement um, lender review approval process, that's what DELRAP stands for. Um, we can make the same decision after our review and approve it on the project. So we can do it in-house, and we don't have to submit it to FHA and then wait for it to go through the FHA process. So it would be a quicker approval process. And there are certain types that we can't do, but um,
Yeah, but it's
but there are
big.
a lot that we can, and it is big. It's a lot, especially for builders. If we have a new project, we get it from the beginning. It saves them 30 days in their approvals
Mm,
to get that back, so that they don't have to wait to close, their FHA loans. So that's a big thing. It's a time saver.
Yeah, of
It eases it
course.
up for them.
And it helps with the pre-sale, and then the requirements for the Fannie and Freddie, and like it's just that's a perfect storm, right, for the builder. That's perfect. And it's huge that you're able to do that. I don't think that there's a lot of companies that have that opportunity like you do.
Yeah,
So
you
it's
do.
big
You have
power
to
to
go through
partners.
test cases and everything to get approved to do it. So, um,
All right. So we talked about your military experience, your
yeah.
VA fire that you were
Oh,
super
I love
excited
my
about.
VA.
What about some other like things for our, we're a lot of our markets are heavy military. And, as military buyers are coming in and out, and values being what they are, condos are a little bit more attractive sometimes for the VA buyer. So tell me what if there's any nuances for them that they, our agents need to be aware of when they are, showing property to our veterans.
Yeah, so VA, it has to be VA approved, right? VA, like they're different animals. So their whole approval process is for the veteran. It's to make sure that any veteran, active duty, retired, is not going to be put in a position where it's undue hardship. So because of that, the real VA's real big reasons to reject a project would be if the project has rental caps where they cap the number of rentals in the project, or a right of first refusal where the HOA can come in and say, well, we want to buy it. We don't accept your buyer. We want somebody else to buy it or rent it, or we'll have to buy it ourselves. So VA doesn't like those two scenarios because should one of their active duty veterans get called into duty, um, they want them to be able to rent out that unit. They want them to be able to sell their house if they need to. They don't want any undue hardship to that veteran. So unless the condominium association has something written within their legal documents that exempt VA encumbered loans from that requirement, it's going to be rejected by VA. And VA's opened it up a bit now. They have some workarounds for those kind of projects, that we can assist the veteran in still being able to get into home with that if they so choose.
Okay, and you said that VA condos they're approved for the life unless something changes. So that's
Yeah,
interesting.
so VA FHA used to be approved for life as well, and lenders used to just only have to review owner occupancy in the end loan. But as of 2011, FHA began expiring it was every 2 years. Now it's every 3 years. VA grandfathered in from the beginning of beginning of VA approvals. And the only way it's going to get withdrawn is usually if somebody, either a homeowner, usually it's an appraiser, goes in, gets a copy of the condo docs and realizes there's a rental cap, that
Mhm.
the HOA added a rental cap that wasn't in place when the VA approval was issued. And they submit it to VA, and VA will withdraw the project if there's no
Oh,
exemption to the veteran loan. Um, so that's the only time I've ever seen it withdrawn, is when the HOAs actually change their docs to add a rental cap.
how often does HOA? How often do the docs get updated? Like do you know? I mean, is it or
Yeah,
is
I
it
mean, there are some that never have changed, and there are some where you'll have a lot of changes and just little minor things. It just depends on the HOA and how comfortable they are. But anytime they change the docs, they got to hire a lawyer, they got to write an amendment. Everyone in the association has to sign off on it. They have to, a certain number of a percentage of owners agree to the changes, and mortgages, and then have it recorded legally. So
that's
some
a lot,
HOAs are fine, like maybe that's an expense they don't want, maybe,
right?
but they do have to have a certain percentage of the homeowners approve it, which can
Okay,
be tricky as well.
sure. So when we were talking about the special assessments, critical repairs, things like that. So when it comes to the special assessments, so you know how much notice does an owner of the property receive for these?
Um, it, the HOA has its own discretion on how they want to do it. Things that have to get done immediately, like you have a major critical repair that has to be done immediately. We had a project that had roof rats. The HOA didn't sit around. They got it done immediately, but it was an immediate special assessment on the project. Um, so all those unit owners, sometimes the HOA, maybe they'll take out a loan and get the work done and then do a special assessment and maybe allow the unit owners, maybe they'll do it monthly, maybe they'll do it um all due by June or all due by whatever. It
But
can be
that gives them
anything. It can be
more.
anything. I mean, we have a project in I think in South Carolina, um where their retaining wall um at the water's edge was collapsing, and they had to repair that. And it's a $10 million project, and they're doing it in phases. And those unit owners had like a $30,000 special assessment, and that's
Wow.
just for the first part of it. So you know it, those special assessments can get up there, and it's up to the board. So if you buy a condo, show up at your board meeting minutes, make sure stuff's getting done,
Is there
and
anything
you're an
that
active
the
board member.
realtors can do to prepare, like to see, like to have like kind of that working knowledge of this this project hasn't had an assessment in several years, or this project has, how can they like noticeably look for those situations for that their buyers aren't going into
Do
a
we have letter size blue backs in there?
problem?
Um, I don't know. I mean, the same thing we're doing is you're reading HOA meeting minutes, you're looking at the budget, you're looking at the replacement reserves, you're seeing have they been putting money in reserves? Do they do it annually? Does their balance sheet indicate, the one project I talked about with the roof, the tarp on it, they had $38 in their replacement reserve account. They had
Oh, no.
an 8-year-old reserve study that said their roof had never ever been replaced, and it was 20 years past due to be replaced. And um you know and they had $38, and they had no intention of doing a special assessment, and the president said, no, you guys don't understand, there's nothing wrong with this roof. Even though there's a tarp on it, there's nothing wrong with it. um so some people just you know
Yeah, I
I
mean, I
think,
guess so. I
yeah,
mean,
you
the
get
amount,
some people that are on fixed incomes too, and they don't. It's a large expense. Like a $30,000 special assessment. That's a big expense.
I
Um,
mean, it's just like buying a new home, right? Like you're buying a resale home
oh
and
yeah,
you move in a week later, all of a sudden your
the
H,
HVAC has to be
yeah.
replaced, and
So I
yeah,
mean, it's part, it's the glory and the doom of being a homeowner. So I mean, it's, yeah, but there are so many benefits to being a condo owner, like you were talking about, like the younger people who, generationally are suggested that they don't want to mow grass, or they want to live more in a city environment. They don't want to take the responsibility of, all the maintenance of the exterior. So condos are huge. That's great. It's a huge benefit for them. So, I mean, do you think that at the end of the day that how to like they're both be whatever property you own has a cost to it, but you also get the equity. There's the cost and the benefit. The reward is at the end of the day is all the equity that you build. Um, which we all know that that's a huge thing. I mean, what is it, like 4% to 7% each year, you're gonna go up in equity. And so if you take that over a lifetime or your 30 years or 5 years, it doesn't matter, you're still getting a large percentage of a savings account in your home. So, with that said, you know, um, what's your advice to people who are looking to show property to a buyer who's interested in a condo? Like, what would be your number one advice to a real estate agent when their customers are super hot and heavy on a condo?
yeah. I mean, I would one, make sure they're giving money to their replacement reserve fund, to make sure that project is set up for your borrower. Nothing worse than saying it's a low maintenance, you don't have to mow, and then they find out they own the interior, exterior, and the yard, and so they're responsible for they are responsible for the mowing, they are responsible for the maintenance, they are, so condominiums can be any which way. So just making sure that they're getting in the one that they want to be in. Be prepared to join your board of directors or show up for your meeting minutes so that you have a say in how it's run. It's not, you against the board or you against the HOA. You are the HOA, so be a voice in it, to make sure that it is being managed properly. And yeah, like parking, and like we talked about, rental caps. If your borrower wants to eventually move on and keep this as an investment to rent out, a condominium that has a lot of rental caps is going to be difficult for you to rent out. So you may not be able to keep it if as a rental if those rental caps have already been filled up. So knowing what you want to do with the project, with your unit in the future, may help determine which one you want. Do you have dogs? Do they let you have dogs? Do you, pets? What are their guidelines for that? So just make sure you're not putting them in a project that, I always say, like, when you look at it, I always try to think like, what would I do if I was in this project? This was, would this scare me? Is this, um, is this something that's going to come back? Are they going to have like large special, like that one project that I said with the roof, that's a large special assessment that's looming, and it's unknown what it will be, because they have no money in their replacement reserves, and that roof's gonna have to be fixed.
Sure.
So
Mm.
yeah, just
Perfect. Well, this is a
doing
lot
what
of
we can.
information. So I'm gonna open it up if anyone has any questions real quick. You can just unmute yourself or you can throw it in the chat. And we will ask the condo queen what kind of questions you have. Well, I guess you explained everything so perfectly, Cheryl.
Well, please don't be afraid to, if you have any follow-up questions, to reach out, and I'm happy to answer any questions. We have a lot of loan officers who, when agents list a project, they just send them the address, and we look it up and see if we see any red flags or anything that may cause concern, or they may want to just know about before they list a project. And same when they have one of our borrowers that they're taking out, they have some projects. Sometimes I get a list of, we're going to look at these 5 today.
Perfect.
What's the
So
story? So we do stuff like that.
our real estate agent should reach out to their loan officer if they're showing property this weekend and it's a condo, to make sure that everything's good to go on those. And if someone's getting a potential listing, that they can also, use our, condo queen to kind of get an idea of what's going on in it. Oh, well, with their loan officer, of course, with their loan officer involved. All right. Well, I appreciate you, Cheryl, and thank you everyone for attending. We'll send out a recap to all of our partners, and we will see you next month.
Thank you.
Bye.